Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Wrapping up a week of central bank talks, the market now looks towards the RBA rate decision on Tuesday with a potential 25 base point rate hike from 4.1 to 4.35%. Along with that, the market for the Australian dollar has rebounded. However, there is still much work to do to the top side to get any further bullish traction. That is, if we clear the 60-day moving average, which is seen roughly around the region of 66.85 to 95. If we see a clearance of that level, then we could see further to the path of 67.55. On Friday, the much anticipated US inflation data, which is preferred by the US Federal Reserve, which is the PCE, excluding energy and food prices, there was a gain of 0.3% on a monthly basis in May and added 4.7% year over year following April's reading, which ticked higher 0.4% and gained by 4.7%. With this now in our rear view mirror, the market turns to a blockbuster week, which unveils the US FOMC minutes, along with that, with the main event being the US non-farm payrolls, which expects a forecast of around 220,000 jobs added from the previous release of 339,000 jobs. We also get an update of US ISM services and the JOLTS data, which will be closely watched. However, the market's likely to kick off on a slightly quieter tone due to the US being closed in observance of Independence Day on the 4th of July. If we do see a rejection to the top side for the Australian dollar, which I mentioned around 66.85.95, then a pullback would see the move to 66.25, and a break there would reveal further weakness back towards the key level that I was calling last week at 65.40. Having broken to the downside from this diamond formation, the euro is attempting to recover after the market did rebound on Friday, or more to the fact, the US dollar did slip following the softer US Federal Reserve's favourite inflation gauge that came in, as I mentioned, softer, which could see a tighter leash on the US for a less hawkish path going forward. Nevertheless, the technicals are weak, so therefore I still feel that the downside is still vulnerable for the euro, and if so, could see a move towards 108.70 and closer to the 108.35 level, and with the broader aspect of 107.70. Any upside attempts is expected to struggle beyond 109.30. The dollar yen outlook for the market is respected and retreating from that key level of 145. And as there is was a little bit of divergence, that is, and a weaker display in technicals, the market could actually pull back towards 144 or down towards 143.65 before any rebounding. A clearance of 145, well, that would give further to the fact that 148 could be on the cards. Sterling, well, the market was a little bit firmer on Friday. Nevertheless, technically still lacking further demand to support any initial rise this week, and therefore could see a reversal and therefore look back towards 126.45 to 125.80 and reassess. Wrapping up with gold, well, the market recently displaying a dragonfly doji came through the next day to a stronger stance. That was on Friday, but there is a bit of weaker play coming in and technicals are still remaining negative. I still, in terms of how I view this, as bearish, due to the fact is that the market is still broadly negative in the fact that the weeklies and monthlies are not showing any breakout to the upside, more to the fact to the downside, with the recent breaking or breaks of levels now looks towards a potential target of 1,850. Any renewed demand should see supply above 1,924 to 28. Wrapping up with oil, the market holds to its third consecutive bullish day, and now into the fourth today. The market is looking up towards the region of somewhere around $71 a barrel. From the broader sense, we are still locked in a 65 to 74 range, and any movement inside there is likely to be whipsawed, as you can see, as there is little trend to support a strong direction from where we currently sit. But nevertheless, any pullbacks would find demand underneath the region of around 67, and demand could actually see that rebound where supply above the region of $72 a barrel finds supply around 74. Well, that's a wrap to the start of the week. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the day.